And what's been your biggest, I guess, learning or surprise, say, in the last 12 months? I mean, obviously, these markets have rapidly accelerated since, I guess, like DeFi summer of 2020. Well, maybe walk me through that, and even maybe the last, 3 years since you started, because the market's changed massively.
Yeah, I mean, so when we started, it was basically almost about to be the bottom of the bear markets, like 2018. And the interesting thing was back then, I really, really, really thought it would be proof of stake protocols that really had this financial risk, because that was how I sort of fell into this. Part of the reason for that is that, you know, if you were to try to execute an attack on a proof of stake, proof of work protocol, like Bitcoin, where you try to basically borrow people's miners in aggregate over the whole world, you would have to effectively corner the electricity market for it to be profitable, because you would basically need to go to every miner and be like, hey, we're going to sell you this derivative where you deliver hash power to us at some future time. But we will give you cheaper electricity, whether that means, we sold you oil or we sold you a bunch of futures, things like that. But in proof of stake, that's less true. The market for it is much more centralized, in the sense that there's a small number of venues. The stakers want to earn yield. That's why there's this crazy explosion in staking derivatives, which, I think I maybe wrote a paper on it a little too early before it kind of like became super popular. But like I think this idea that stakers really want leverage and yield means that they're more easy to coordinate to do an attack. And in some sense, that was how I got into this. I think the thing that really changed my mind and needed me to warp my finance brain was Uniswap first. Because, I think to someone who worked in trading, especially in, more adversarial trading, like high frequency trading, Uniswap liquidity providers, naively, it seems like they're getting a terrible deal, right? On every trade, they are giving up the asset that's going up in value for the asset that's going down in value. And they don't like adjust their strategy. They take a tiny fee, but like, hey, maybe it doesn't work. But seeing that work in practice and seeing liquidity providers actually keep their liquidity there for a long time, when we were analyzing their data in 2019, is what led us to sort of write, probably the most cited academic paper in DeFi right now, which is on why Uniswap works. But I think that was like the first surprise to me, but it made me realize there's this huge demand for passive investment products, kind of like there was in like right after the financial crisis, where like ETFs grew from like sub $100 billion to like this like multi-trillion-dollar asset class. And like watching the evolution of that, of like, hey, people really do actually want these passive products, like staking products. Staking products are kind of like the new ETF. They're like Gen Z's ETF in my mind, in some weird indirect manner. And that part has been super interesting to see. In terms of like the non-DeFi stuff, I'll be the first to admit I don't totally understand profile pic NFTs. It's just not something I have a great understanding for. But I do think this idea that NFTs serving as a form of sort of pseudo identity, not like strong identity, but some form of identity, will interact with a lot more of DeFi and sort of bring us different types of products that might be more risky, but like, you're able to offer them because you have some kind of identity wrapper around someone.